Freddie Mac just released on April 15th of 24 an update concerning a proposed settlement agreement subject to court order, which involves the National Association of Realtors versus Barnett and Maher in separate cases. Now, this is pretty big news because it affects buyers' affordability, not just down payment and closing costs, but agent commissions if they are to be paid for by a buyer. And on the other side, the seller's ability to maximize profits on the sale of their home. Now, if you're not familiar with the lawsuit, basically sellers won't have to offer a co-op to buyer's agents for bringing them a qualified buyer, which is traditionally done. Instead, when a co-op is not offered and the buyer will have to pay that fee, right? Every brokerage is going to have, an agent's going to have a different agreement that they have. They also have to come into like a signed agreement, so then we don't run into any type of issues on who owes money and who doesn't, right? So the big downside when using a VA home loan is that you cannot pay for agent fees in that transaction. Now, really the only way that it can be is if they are covered by the seller or really anyone other than the veteran using the VA home loan, right? Using the VA home loan, remember, you don't need to be a veteran to use the VA home loan because you also have surviving spouses that can use the VA home loan, so it also applies to them. So as long as they meet the eligibility and criteria requirements, they can leverage using the VA home loan and all the benefits that come with that. Now, that being out of the way, on conventional loans, agents are able to charge borrowers a broker fee or a fee to use their services. Another thing to keep in mind is sellers are allowed to give a seller concession, right? Basically what that means is a seller concession is to cover closing costs for the buyer. Now, do we really see a lot of that on conventional loans? I mean, it's been years, but I haven't seen anyone really utilize them. We definitely see a lot of seller credits when it comes to like FHA loans and VA home loans, which makes it, again, a lot more affordable for veterans to be able to purchase a property because of that. Now, on conventional loans, it really there's a seller concession cap. Now, it really depends. It's anywhere from 2% seller credit to a 3% seller credit. And it all really is going to depend on the occupancy of that loan, right? So you're purchasing it as a primary, secondary, or investment property, and how much money you're putting down, which ranges from 5% to 10%. And up from there in 25%. So let me give you guys a good example. So on a primary residence, when you have less than 10% down, the max seller credit is going to be 3%. Now, versus if you do a 25% or greater down payment, then sellers are allowed to give a 9% credit of the loan amount, which is pretty big. Now, to be honest, I've never seen a 9% seller credit on any loan product that exists. As a side note, VA loans do not have a max percentage for giving a credit to a buyer, as long as it covers all closing costs, and they're allowed a 4%, an additional 4% that they can use towards paying off personal debt. So fees or costs customarily paid by a property seller according with local convention are subject to these financing contingency limits, right? Now, this is what Freddie Mac has come out. Furthermore, they say that buyers' agents' fees have historically been paid for by a property seller or a property seller's real estate agent, and as such, they are currently excluded from these financing concession limits. So what that means in basic terms is that if a seller is going to give a credit to cover the buyer's agent's fees, they're not subject to that max concession per Freddie Mac. So let's say you're getting a 3% seller credit. They can give you an additional 2% or 1% or whatever is negotiated to cover that cost, which helps buyers out significantly. So if they are getting a credit, they can utilize all of that to be able to be a homeowner, especially in today's market where real estate is kind of crazy. And a lot of times, if people are getting credits, they're really utilizing them to do a buy down on their interest rates so they don't have to do a refinance later, especially with a conventional loan, because that process is like almost buying a home where you have to get an appraisal. Everything needs to be accounted for in order to qualify for a refinance versus, let's say, a VA loan where you have the interest rate reduction refinance loan, which we do. We just did a video on that, so check out the channel. Drop any comments you guys have. Also, if you guys have questions or comments about this current lawsuit and the impact that it has, please drop it down in the comments section. Now, this is an ever-evolving lawsuit and development just because the court hasn't finalized the approval. But people are asking so much, and Fannie Mae and Ginnie Mae and Freddie Mac are getting so many calls that they're like, you know what? Let's just get something out to the community, so at least set some guidelines, because we're already seeing sellers not offer seller credits, which obviously has a big impact, or seller co-ops, which has a big impact on people purchasing. So we'll keep you guys posted on that. Don't forget to smash the like and subscribe button, and I'll catch you guys soon.